Good morning. This is Craig Moddelmog on this snowy October 29th, Tuesday for Cornerstone Wealth Management. This week's edition of Wall Street X's and O's. I would like to begin by saying that the commentaries today are not either advice to buy or sell anything. It's basically my thoughts and opinions. Products that may be mentioned can lose money, I will say, and will eventually. I also will say that they are not FDIC insured. The only things FDIC insured are bank products. So anyway, that is the disclosure for the day. I'd like to thank everyone for taking time today. I've got a couple of historical significant notes for the day. First of all, yesterday was a celebration of the Cuban Missile Crisis ending. Back in October 28th, 1962. I always find history interesting. Today we also celebrate, and I found this interesting, 90 years since the start of the stock market crash. I'm not sure that's a reason to celebrate, just saying. But anyway, today, 90 years ago, the stock market began to crash, and what was interesting about it is it erased a huge bull market run that started in the early 20s and then kind of culminated with the peak of 1929, which was today, and then the market actually sold off 89%. That's pretty stiff. So, a very interesting day in the market. But what is also even more interesting, I find, an analyst for LPL had come out and said that this has actually been the best trading day over the last 70 years, 7 decades. So, who'd have thunk it? I also found an interesting note where they used to have carrier pigeons carry little rolled up pieces of paper on their little legs that were stock price closes for the day. I used to think it was bad when I first got in this business, and I had to write out a physical stock ticket on a piece of paper about this big. I would get up and I would run down the hallway and I would have to time stamp it. And based on that time stamp, that's what price my clients got to buy and or sell something. Crazy. That was only in 1993, not that long ago. But anyway, carrier pigeons running down. Now we press a button. I'll take the button. I'm just saying. You know what? Although I was in better shape back then because it forced you to get up and run. Anyway, I'm talking way too much. News for the day. Big news. The Fed meets this week. There is a 90 to 95% chance, 90 to 95. Hold on here. Oh, that's much better. Okay, 90 to 95% chance the Fed cuts rates 0.25%. I really could care less about the rate cut. I'm more focused on his language. What kind of language is Fed Chair Powell going to be using? Is it going to relay confidence in the markets, or is it going to relay some concerns? That's the biggest thing. And I think based on that language, you are going to see the market react. We have a very emotional market that we are currently in and have been in for quite some time. They really focus on his language. They used to look at Greenspan and how big was the pile of books he was carrying walking into the meeting. Seriously? But they did, It's news, right? Trying to sell crap to us. And there I go saying crap again. CNBC, all these news agencies, CNN, CNBC, Fox News, no offense, people, they are trying to sell stuff to you. That is called ratings, okay? So be very careful. Anyway, let's focus on his language for the day. Moving on, thing I am very, very focused on is in the world of looking at corporate profits. All too often, people get hung up on economic cycles. Ooh, it's the economic cycle. We're at the end of the economic cycle. Ooh, this bear market or bull market has been running for 11 years. It's the end of the cycle. I like to focus more on profits. corporate profits. At the end of the day, are companies making money? Are they losing money? It's pretty dang simple, honestly, but we try to make it a lot more complex, a lot more colorful. Why? It sells ratings, back to ratings, okay? I'm banging on the news agencies. It's a bunch of junk. Anyway, if you go back to 1935, there have been 13 recorded recessions. 1, 3, 13, okay? What's interesting is that we have had 4 years where a recession was not accompanied by a bear market, okay? That means that we were in an economic recession and a bear market did not follow. We also have several bear markets, 3 to be specific, and this is all coming from Rich Bernstein. Rich was a stud with Merrill Lynch back in the day when I was at Merrill, and he's a stud. Rich Bernstein, I like him. We've also had 3 times when a recession did not follow a bear market. You seeing some kind of things that aren't kind of consistent? Yeah, that's the markets, okay? Mr. Market is going to throw you curveballs, and you can't afford to swing and miss often. So, with that said, what are we focusing on? We are focusing on corporate profits, okay? What's interesting? This was in the Wall Street Journal yesterday. We are now embarking on the longest period of margin contraction since post-war history. What does that mean? Since after World War II, okay? We are going on a 4.5-year stretch in which we have seen a contraction or a decline in corporate profits. Now, with that said, if this continues, what is probably coming? Probably a recession. Some day down the road, it's coming. I'm just telling you. When? Who knows, okay? But anyway, what we're under right now is a profit margin contraction. What we need to see is corporate profits reaccelerate and take back off. Right now, we have not seen that. We've seen contraction for 4.5 years. That is the longest since post-war time frame. Okay, so that's what I'm tuning into. Outside of that, it's a big week. Lots going on, always fun stuff. It's what keeps me showing up every day, keeps it exciting, keeps it real, right? So anyway, what we're going to continue to focus on, again, quality asset allocation. We are going to focus on asset allocation. We are not focusing on picking stocks, picking sectors, none of that junk. Because you know why? Nobody can do it. Nobody can do it consistently. What wins in the end? Asset allocation, managing risk. Okay? So, for Tuesday, October 29th, on this snowy day in Fort Collins, Colorado, this is Craig Moddelmog for this week's Wall Street X's and O's, and I am out.